You're listening to The Whole Truth, a Resources Rising Stars podcast.
Hello and welcome back to The Whole Truth podcast. I'm Paul Armstrong. I've just been in the studio with Darren Gordon. He's the Managing Director of Centaurus Metals. If you subscribe to the investment idea of counter-cyclical investment is the way to go, a bit of Warren Buffett sort of approach here, and the time to run into the building is when everybody else is running out, then you're going to love this episode because Darren takes us through the company's Jaguar nickel project in Brazil. Obviously, nickel is not the flavour of the month, unlike gold and copper, but he says this is why he believes the stock is well placed from an investment perspective. The nickel price is definitely, you would say, at the lower end of the cycle. He believes that's where the opportunity lies. He outlines the company's strategic partnership talks for the Jaguar project and why an outcome there will unlock the value of that project and be such a re-rating opportunity for the stock. But there's more to the Centaurus story now than just nickel. The company's in the copper gold exploration space in Brazil. He talks about this as a set of steak knives, if you like. They're going to drill holes here. There's already no mineralisation, and we all know what some good copper gold results can do to a company's share price. Darren takes us through the talks, through the exploration plan, and through the nickel market, why he believes there's an opportunity. Darren, are you sick of seeing these headlines day in, day out about the roaring gold price, the copper price, the projections for copper to take off? Here you are well immersed in nickel land. Are you feeling a bit unloved?
Absolutely, we feel unloved, but those are the markets that we're in right now, and we've got to just persist and know that we've got a very good project. And with that project, over time, that value will come to fruition. And I think over the longer run, we know that markets turn, and that we'll actually be able to bring this project to the market, and see some really good upside. So yes, short term, we have, we look at the gold price and we look at the way that some of the stocks are running in gold, but we know that we'll have our day.
Yeah. And it's a classic counter-cyclical opportunity, I suppose, from that perspective. Yes, nickel's been sold off, and we can get into the whys and wherefores of that in a minute. But nonetheless, those who subscribe to the view, the sort of Warren Buffett-esque view of the world, that the time you've got to run into the building when everyone's running out and vice versa. So on that basis, you would be running into the nickel industry.
Yeah, no, I think so. I mean, we obviously have a biased view of the world that that's what people should be doing, but nickel's really been flatlined for probably 18 months now. And I think, the market is starting to realise that the price of nickel's probably not going to fall much further than where it is. It sort of seems to have a base around $15,000 a tonne. And whilst it hasn't moved upwards yet, when it does, you're going to see people coming back into the market. So if you've got any sort of counter-cyclical view that the supply-demand balance is going to get sorted out, that Indonesia's going to do something to fix that, or through the Chinese, then you could look at it in a way that says nickel prices have got to move higher because there's just not enough people making a decent buck out of nickel right now.
So let's look at that. What's driven that price down to, as you say, to 15,000? So you mentioned Indonesia, these Indonesian projects, or perhaps more accurately put, these Chinese projects in Indonesia, which we now see they're wreaking horrendous environmental destruction in Indonesia, and the fallout on the locals is absolutely devastating. Nonetheless, people still seem willing to buy these EVs that contain nickel from those projects.
Yep.
But putting that aside, I mean, that's obviously baked into the price now, the impact of that supply. How do you see that supply from Indonesia unfolding over the next 12 months or so?
Yeah, look, I mean, I think probably in the next 12 months there's still more supply to come on stream because there's current construction of HPAL plants over there that are halfway through or being close to come to fruition. So I'd expect that you still see more supply coming on stream next year. But that being said, then I think the government of Indonesia will do some things around its licensing on the mining side of things. They're clearly not generating enough revenue out of their royalty streams. So I think they tighten that up. They lift the ore prices, lifts overall costs. And all of a sudden you've got a market that is actually pushing higher. Combine that with a little bit of demand increase, whether that's through global growth, what's happening with stainless steel, or whether that's through the EVs in Europe and in North America starting to sort of lift to what was perceived to be the trajectory that they were on a couple of years ago. Obviously, that hasn't played out, but you think that that's still going to come to fruition over time.
So if you put the supply scenario, as you're saying, it is it must be peaking. Demand is starting to show some growth again. So that's your argument that the price must be around the bottom.
Yeah.
So on that basis, you would say that your Jaguar nickel project could make money at the current price?
Absolutely.
Right.
We're in the bottom quartile of all-in sustaining costs. We showed that through our economic studies. We sit around about $4.40 a pound all-in sustaining costs. So, when you look at that relative to where the nickel price is today, around $6.70, we still would be in good shape. Issue is we've got to fund the project, right? So, we're in the middle of a strategic partnering process to bring that to fruition. But once we actually complete that, we unlock all of those cash flows. And, when you're potentially making $100 million plus a year in free cash over, we've got a 15-year reserve base just from the open pit, it shows the upside that exists here. And so I'm very comfortable that we would be making money if we're in the market today. We're probably one of the few groups that would be able to say that. And so we've got to look at our own lane to a certain extent, say yes, there's the Indonesian market. Yes, we need to understand what's going on in that part of the world because that's what's driving price. But look at our own project. Costs are where they need to be and we can make money out of that. So let's get it funded. Let's do it at the bottom of the cycle. And then we can actually lift through that as prices pop.
Now, that's what they say in this business. You need to be able to show that your project is profitable throughout the cycle. It's a bit of a motherhood, waffly way of saying you need to be able to make money at the bottom of the price cycle. So in this case, if you accept the view that we are at or thereabouts at the bottom of the price cycle and Jaguar makes money, then that's the time to be going into the project. So the question becomes, rather than suppose going in, as we've seen so many times in the past, the iron ore industry being the most famous for this, going in at a peak price, and of course, as soon as things go sour, you're underwater.
Yep.
But so on that basis, what are you trying to achieve with the strategic partnering talks? What are they about? Where are they at? What sort of time frame do you have in mind to resolve this?
Yeah, look, we've made good progress. We've obviously been talking to groups as we've been doing the study work. We have data rooms that are available that people have accessed. So, I guess priority number one is to find a partner that is an end user in the downstream that wants the offtake and then can bring the capital for the equity piece of the project that gets that side of it done at a valuation that is much better than where our market cap is right now. And then we roll that in with the balance of that coming from debt. And why we think that we can get a better valuation look through is because the groups that we're talking to don't want to be operators. They want people on the ground. They want people in Brazil building the projects out. And they really are trying to access the supply. And they're trying to access this long-term supply of nickel, which generally doesn't exist, particularly in sulfides. All this growth in Indonesia is all lateritic stuff. And okay, that's fine. But if you want a source of nickel that's low carbon footprint, low cost, in a jurisdiction that's not Indonesia/China, then we're at the perfect place to do that. So, we can get these groups in that want to actually have that long-term supply. We've shown that we've got the mine life. We had to show that we had the cost structure because couldn't be a project that was just coming in and out of the market as it moved up and down. All in sustaining costs where they are right now. If we, achieve that, then we're in really, really good shape. And these groups know that they've got a supply for the next 15, 20, 25 years.
So where do these groups, as you refer to them, where do they sit in the production chain? Are they in the consumer chain? Are they nickel processors? Are they end users?
Yeah, so they're basically what I'd call midstream guys. They are in the downstream. We're in the upstream. They're in the downstream, but they're producing PCAM or they're producing other nickel products that basically go into the battery market, principally in Asia. I think that's where the new age of downstream processing is coming from.
They're a step away from lithium battery production. They supply
into those
a finished product into the battery manufacturers.
Correct, absolutely.
And why do they like the Jaguar project? You said obviously they want nickel sulfides, but what do they say to you about it?
It's not so much that they want the nickel sulfide. The concentrate is a relatively low capital intensity pathway. So if you're looking at getting a project started for 20,000 tonnes a year of nickel, building a sulfide project, with a float plant is actually one of the most inexpensive ways of actually getting those nickel units. But what they really like, we've got a very high grade nickel product. It does have a low carbon footprint. It is in a jurisdiction that's not Indonesia, and it's one that is actually relatively close to end markets. So, for us, we feel like, it's got all the right attributes, and now we just got to sort of bring that funding proposition to fruition. Right. And I think that happens probably over the next sort of 3 or 4 months. We understand where those parties are at. And to me, it's a huge value driver. We've got a project now that's licensed. We've got our environmental licenses. We've got our mining lease granted. We've done the studies. We know what we want to build. So now it's really about getting the dollars. And once we've got those dollars and we can build those projects, all of a sudden we can extract those cash flows that we talk about. So it looks nice on paper.
Well, what do you envisage in a strategic partnership deal in terms of you sell down a stake in the project?
Yeah, yep.
At an asset level.
Correct.
To what sort of level do you think would be a good outcome?
We're not hung up about where that percentage gets to. It will be a minority position, but it really is driven by the valuation look-through, and then how much with that valuation look-through we can get from the partner as far as the equity funding goes. So, we've got a project that's going to cost us around about $400 million US. We probably need to find about $200 million US out of the equity partners. That conversation seems to be very open to that sort of level of funding. And then it's just about, what valuation are we putting on it? What valuation are they putting on it? Let's find the middle ground where that lands.
So it takes you to what, 60, 70% sort of stake?
Yeah, I think the minority partner probably ends up around that 30 to 40% type level.
Yeah. Pretty conventional. In
correct.
That sort of,
nothing overly complicated.
It becomes a JV arrangement.
Absolutely. Yep.
In which you retain control and operatorship.
Yep, that's the plan, and that's really what the partners that we're talking to want from us.
And timing on this, you say 3 to 4 months. I mean, this would be a major re-rate event for the stock, presumably?
Absolutely. Well, I look at it that it is, because really I think we get held back in the market a little bit because we are perceived to become raised, and so it's if we solve that funding piece, then all of a sudden people can buy the stock knowing that there's not a big, massive equity raise.
And cut to the chase. You're confident you are going to get that deal done?
Yeah, absolutely.
Based on the conversations you're having now?
Yeah, I mean, the product's very good. It's really, the thing we're fighting is the lack of urgency that anyone in the nickel space has right now. So you've just got to, and we're a junior company. Like every junior company wants things to happen yesterday. The groups that we're dealing with are much bigger organisations and take their time.
They want to be counter-cyclical, but not too counter-cyclical.
Correct. Yeah, like they will go through their processes. So we've got to be a little bit patient in that. And we want to get the right partners, people that actually can bring.
These are Western companies, Western groups?
Yeah, correct. So like I look at it and go, if we can achieve that, then that's where there's a massive re-rate. And that's, before we look at what we can be doing in some of our other projects.
Right. Now let's talk about those other projects, because while you've been pursuing this flagship Jaguar nickel project, you've announced the acquisition of a couple of copper gold projects also in Brazil.
Yep.
This isn't a pivot towards copper. You would say this is an also a nice to have, a set of steak knives in the overall group?
Look, I mean, we really look at it as, if you go back to our corporate purpose is to build a strategic mineral business in Brazil. And, Jaguar, we've defined it. We know the economics are there. We've now got to fund it and develop it. But we've got to now be thinking about what's the pipeline of projects that sit behind that. And we've got an extremely good exploration and approvals team in country. And we're leveraging off what they can do. We've been in the Carajás now for 5 years working on Jaguar. We've got a very good reputation there. There's not, because Vale's dominated the Carajás for such a long period of time, there's really not that many players in that space, and we are one of the few that are there. So yes, these are smaller deals into the copper gold opportunities, but this project's only 30 kilometres outside the main hub in the Carajás, which is called Parapebas. Vale operate out of there. They've got their rail going out to the coast from there. It's about 270,000 people. So we're in very good proximity to a lot of other good copper opportunities. And when you think about the Carajás, it is world-renowned for copper gold opportunities, IOCG type opportunities, and we want to explore that. So, we did a deal, probably 18 months ago, 2 years ago, on the project called Boy Novo. We've done some work on that, and we've got some really good drill intercepts. And more recently, we've announced a transaction where we acquired a ground immediately to the north, I think called Rio Novo, but it will become part of a broader Boy Novo project.
So what's the exploration plan there, Darren, in terms of how do you unlock some value from this copper gold?
Yeah, so we'll do more drilling now. We raised money back in August, so some of that will get deployed towards doing exploration and the drilling. So Boy Novo drilling will continue. In the meantime, we'll be doing all of the work that we've done at Boy Novo on the Rio Novo ground, which is soils and mag, and we'll go through and do EM surveys. And all of this hasn't been done on that before. So, like modern exploration techniques, we think can actually open up a world of opportunity.
There's been some good copper grades in the drilling that's been done.
Absolutely, yeah. So look, we would expect more of the same, and it's about then trying to build a critical mass. There might be other pieces of ground in and around this area that we can do some deals on. So it's about slowly building out that pipeline of opportunity. And, we see copper as a great one because of where we're located. But doesn't sort of take away from the fact, first and foremost, we'll work Jaguar up and get that funded. And that's a massive value re-rate. But in the meantime, shareholders can get access to some drill results.
So you can walk and chew gum at the same time.
Absolutely.
You can have these talks over Jaguar by no means should impinge on the exploration, or vice versa, perhaps more importantly. No. So you can go out there, run an exploration program, drill holes.
Easily.
We all know in the current environment, good copper gold intersections are worth more than just about anything in this market. So some good results there could be an impetus for the share price.
Absolutely. Yeah, look, the last time we had results was probably back in May, June, and that was really before copper was running. We had intersections there. I think it's like 35 metres at 1.6 or 1.8% copper, 12 metres at 2.5% copper or thereabouts. So, those sort of things need to be followed up and do the work. But if I get those results now and actually can build out some critical mass, I think the market will go, okay, well, there's a second project coming along inside Centaurus. Jaguar is what is my bread and butter. I can get in, and I know that if I'm counter-cyclical, I can buy it today and going to have a pretty significant value re-rate in the relatively short period of time. But I could actually get some other nice wins along the way with some copper drill results.
So what happens now over the next 3 months? Strategic talks on the nickel, exploration on the copper and gold.
Yep.
Giving investors 2 tickets in the lottery.
Absolutely. Yeah. We think, that's pretty much nailed it. It's, there's a lot going on inside Centaurus. It's a company that's got some seriously good assets. It's in a commodity at the moment that's a little bit unloved, principally in the nickel side of it. But, that will change. I've been in these markets a long time, and everything is cyclical.
There's also got to be a risk there that someone decides, one of these bigger companies or one of your bigger nickel peers says, hey, this is the time to buy assets. The guys who have still got plenty of cash flow, the big boys, since this is the time to buy assets, we won't get something like Jaguar, that size, nickel sulfides, that far developed, approved. We'll steal this now. We'll take them over.
Yeah, it could happen. I suspect, that people want to see it get de-risked. So, find that party that's going to take the offtake, that's going to be your customer. And I think that delivers a lot of that de-risking step. And then, those sort of things probably unfold.
Yeah.
But, our job is to try to get that value up where it should be. And, the best way to do that is to bring this offtake and partnering together.
So you got several of these parties in a data room, is that?
Yeah. No, look, we've been active with a number of groups for a period of time. As I said, from our point of view, we would love to have already happened or happened yesterday, but it's, a junior company dealing with some pretty significant groups.
They'll do it in their own sweet time, won't they?
Yeah. And our job's just trying to keep them moving along.
Right. Thanks for your time.
No worries, Paul. Cheers.
You've been listening to The Whole Truth, a Resources Rising Stars podcast, produced by Resource Media, hosted by Paul Armstrong for Reed Corporate. Please note that Reed Corporate does not provide investment advice, and investors should seek personalised advice before making any investment decisions.